Southeast Asia at the moment? Where do you invest?
Yeah, Arch Capital, we're a boutique firm. We raise opportunistic funds. We also have some core funds that we're managing. We are in Southeast Asia. We are invested in the Philippines, in Thailand, and in Singapore. We're looking very closely at Vietnam as well. But so far, those are the countries where we have been operating in.
Fantastic. And Roland?
Thank you. I'm with EXS Capital Group. We're also a bit of a boutique investment management house. I suppose we feel we have a slightly differentiated approach whereby, particularly in emerging markets, we look to align ourselves with expert local operating partners. So rather than try and learn everything about the market ourselves, we try and align with appropriate local expertise. So on that basis, we've been investing in Vietnam since 2013. We're also active in the data center space, which is really a Pan-Asian as well as Europe platform. So on the basis that we're also looking at sort of thematic investment programs such as data centers, student housing, boutique hotels, that can actually take us to most or all markets. So if we like the fundamentals of the underlying asset class, that will sort of pique our interest in many of these markets.
And I suppose the three things you mentioned there, boutique hotels, data centers, and student accommodation, that all ties into the theme of a growing middle class, rising wealth in these emerging market destinations, yeah?
Absolutely, and not unlike Jonathan, we tend to target more opportunistic and value-added type investments, so we just see a greater risk-reward profile in some of these more less well-established asset classes.
So going back to some of those countries we mentioned, Jonathan, Thailand. Why Thailand? Why now?
We've been investing in Thailand since it's over 12, 13 years now. I think not very different from the experience of EXS, Roland's group. We've been in partnership with a local developer there. We've done 7 deals with them. We've been in and out, all of them quite profitable. We've done residential, we're doing office. We're doing a resort in Phuket. And why Thailand? Over the years, we've seen, when we went in, Thaksin was there, and then he left, and then there was the yellow shirt, the red shirt. They don't have the black shirts, fortunately. And I think what's good with the market is very resilient, and we've seen them. The old king has passed away. That was a big risk. People didn't know what will happen after that, but it was uneventful. There was a very smooth transition. So they had an election now. The military rule has passed on to civilian rule, and there's a new king. So, and despite all of those changes and political upheavals, somehow the economy, it was very quick to recover. And the fundamentals there is that unemployment is quite low, 1.8%, always sub 2%. The government never changed their emphasis on real estate and on infrastructure. In a few years' time, they call it there in Bangkok BTS or LRTs. It's MTRs here. In a few years' time, they would have as much, maybe in 2-3 years' time, they would have as much stations as what Hong Kong has. So that network is expanding. So they're responding to people moving in to the cities and then with the infrastructure. So this story is quite the story of Asia. It's urbanization, infrastructure, growing income, opportunity for us. So we just do, that's why we like Thailand. That formula continues to work.
And do you target your investments towards places which are going to be opened up by the new BTS stations then?
Exactly. On the residential side, we will acquire site beside those new stations, and we'll just time it so that by the time those stations are operational, our residential development will be operational.
Yeah. I mean, Thailand is also well known for investments into healthcare and health tourism and things like that. Is that something you've explored at all?
We do not go, we're purely real estate. We'd like to go into that discipline, and that's the thing we know. So the closest thing we've ever gone there is in Phuket, where we have a large-scale master plan development. And one of the anchors who bought land from us is senior living concept. So it's a combination of three listed companies in Bangkok, and they have this concept, and they think it will grow big in Thailand and some parts of Asia. So they chose our site to be the first one, and they would have some health component there, hospital. Although it's not for like assisted care; these are for active seniors.
Yeah, I mean, Thailand is a sort of well-known destination now for senior living. A lot of people from America moving to places like Chiang Mai and things like that.
That's true. That's true. Yeah, yeah.
Absolutely. Let's talk a little bit about Vietnam. Why Vietnam?
When we went into Vietnam, the opportunity for us was, at the time, local interest rates were about 26%. So as you can imagine, trying to develop residential in that environment, it's very difficult to raise financing. Asian markets are particularly volatile. We like to try and get into a market when it's, suffering. We see that as an opportunity. But to Jonathan's point, they do tend to rebound quite quickly. So if you can get in an effective manner, hopefully then you can capture the turnaround. So for us, we started to look at Vietnam back in 2012. We thought this was a fairly unique opportunity in terms of the macro dynamics, in terms of the population growth, pretty good GDP growth, notwithstanding that volatile time. And so we wanted to provide financing and funding when really no one else could. And so we targeted the residential sector, although we also looked for operating partners that were also active on the commercial side, because at least then they have some income generation alongside the more speculative residential side. So we, assessed very carefully joint venture partners, shortlisted a few, and ended up doing an investment with a local development firm that at the time was a very boutique firm and quite small. And over the past 6-7 years, we've assisted to grow that business, and it's now one of the sort of top private developers in the country. So that was sort of the opportunity for us.
And where are these developments, in Ho Chi Minh or Hanoi?
Ho Chi Minh at the moment, all Ho Chi Minh.
And going forward, there's a lot of talk about a lot of manufacturing moving out of Guangdong province and into Vietnam. There are some industrial parks being developed there. What opportunities do you see that?
Well, certainly we have not segued into industrial development, but Vietnam is an indirect beneficiary of this U.S.-China trade situation. So frankly, it's good for the local economy, and so we're indirect beneficiaries of that.
Yeah, and even just to add to that, this U.S.-China, even before that, before the trade war, there was, for large manufacturers, there's always a China plus one policy. And that means you don't concentrate all your manufacturing just in China. So even before the trade war, Vietnam has always been that destination. It's part of the reason why we're also very interested in Vietnam. But going to that question on the trade war, there is really, the way we're looking at the real estate market is there's no direct impact, but it's more of what's happening on the macro. So first is on the currency side. It tends to strengthen the currencies of these markets. So you've seen the Philippine peso, the Thai baht strengthening, I think the Vietnam dong as well, becoming more stable. And also, it's interesting, for example, in Thailand, because of that trade war, the two largest trading partners for them is China and the US. The trade with China is going down. It's been decreasing because the manufacturing activity is going slower. But for the US, it's increasing, because the U.S. is directing the finished goods importation to Thailand. So in that sense, it feeds the macro and continues the growth story for all of these countries.
And how supportive is the Vietnam government for developers? I mean, particularly if they're trying to promote themselves as a new destination for industrialization?
Well, certainly since we've been investing into Vietnam, the restrictions for foreign ownership have been softened quite considerably. So whereas previously we had been selling the vast bulk of our residential sales to the domestic market, in our most recent launch, it's actually been pretty much 50-50. So yeah, we have found government policy to be supportive and proactive in opening up investment.
What does a Hong Kong investor have to do to invest in Vietnam? Do they need to partner with a local Vietnamese person, or can they buy outright?
I believe they can now buy outright.
Fantastic. Philippines. What's going on in the Philippines, and why is that attractive?
Why we like Philippines? Just recently, they said they missed their 6% GDP target last quarter. But the interesting part of that is, since they're below 6%, they're at 5%, and this is the 30th straight quarterly growth of over 5%. So the bad news is not that bad. They have unprecedented growth, and I think averaging 6% over the last 7 years is quite good. The government now is doing the right thing, which is addressing, again, the infrastructure. They're spending a lot. They're doubling in terms of percentage of GDP investments in infrastructure specific to Metro Manila. So that's opening up a lot of opportunities for us. And one big driver for Philippines, which is not present in other Southeast Asian countries, is the business process outsourcing. They are competing with India. They started with call centers, but now it's all ITs. They're doing services. The biggest law firm in the Philippines, the biggest employer of lawyers in the Philippines is not a law firm. It's a BPO company which services the United States, different law firms. They do the encoding in the Philippines. Same with the medical field. So that this value-add BPO is fueling the demand for office. And in Makati, where we have also invested a few years back in office, the vacancy is 2%. Annual escalation, which you can show it in contract, is 5% on rentals. So the yields have been very fantastic. It's 7 to 9% achievable in this market.
And apart from Makati, Makati is the main place you're investing, or where else is good?
The two main cities are Makati and Cebu. So these are the cities where really that BPO also is locating. So in terms of office, that's where the drive is happening. Cebu City vacancy is at 5%, so it's also doing very well. Residential demand is always there. We also like Resi because there's a lot of backup, and because of the traffic, the problem with infrastructure, then the prime properties become more prime, and the desirable address closer to the place of work is also, it's gaining a lot of momentum.
You mentioned that the government is adding infrastructure. What are they doing? Are they doing similar to Bangkok and putting in a transportation?
Not as extensive as that, but they're doing the first. If you go to Bangkok, they have a lot of these skyways. So Philippines is starting to do that. They're laying out a few of the railways as well, but not as extensively as Bangkok. But the direction is going there.
Let's talk about Singapore, another country you mentioned. And in the news at the moment, you often, or in not so much the news, but on sort of Twitter and in the rumor feeds, you hear about people moving from Hong Kong down to Singapore. What are you seeing Are you seeing anything in that space, or is that just rumors? And how is Singapore performing?
Well, I suppose we may be quite representative of what's happening. Our firm has been based in Hong Kong for the last 11 years or so. Over the summer, we've actually opened a Singapore office, and we will continue to operate out of Hong Kong, but we will have sort of one foot in each jurisdiction. We obviously manage funds on behalf of other people. We want to be a little bit. We feel it's prudent to perhaps have a presence in Singapore as well. Hopefully the Hong Kong situation settles down, but I think explaining to people at the moment, why they should be investing in a Hong Kong manager, it's a question that we would like to give more comfort to. So we have been quite active in setting up our Singapore presence. We're in the process of submitting an application for a fund management license, and we will be regulated in both jurisdictions. We have heard anecdotally that there are other businesses that are, looking to perhaps not relocate, but certainly have dual presence.
Yeah, I think Arch Capital is our headquarters here, and I don't think we're moving out of Hong Kong that soon. Those things that are really quite real, probably for the retail people. They want to buy houses there. They want to park some money there. I was just recently invited to another talk on how to invest in Singapore for individual investors, and it's interesting because this is the first time that such forum has happened. So there is interest to do that. But on the institutional level, Singapore is still a favored destination. We've recently acquired an office building there, and the attention, the amount of money that's looking at Singapore is quite big. So the liquidity is there, which is also good. And the yields are happening. There's no oversupply. There is good rental increase. So we're quite happy with that market. Residential is a problem because the government has tightened the market too much. There is the stamp duty tax, 15% if you go in, and then as you go out, you get another. If you go out within the first 3 years, you get hit by another stamp duty. So you almost have to make like 30, 40% just to break even on those taxes alone. And then loan to value, if you're buying and trying to develop, you can only borrow up to, like, if you're a foreign investor, up to 30%. So it's really a difficult proposition, but we're watching it closely because we believe in the fundamentals. There's a lot of demand for residential. People like the quiet environment of Singapore, as you can see, and so there is that demand, but then it's just really not easy to make the numbers work with the current regulations.
What sort of yields are they generating?
It's getting closer to Hong Kong. It's like 3.5–4% if you're lucky. Yeah. But what we like with this investment is it's still a long time of leasehold that we have, and this repositioning that will add value to the asset.
And how does that compare with places like the Philippines and Thailand and Vietnam that we've talked about in terms of yields?
The yields are much better in Thailand, the Philippines, but also you'll have to factor in the currency risks. I mean, the cost of hedge for Thai baht and the Philippine peso is much more compared to Singapore, and of course, Hong Kong dollars is pegged. So that's the differential. But even with your cost of hedge or the currency discount, you still get real better yields in the Philippines and in Thailand, just basically because there is a higher rental increase. And there's more momentum because they're starting from a lower base.
What sort of numbers are we talking about?
Philippines, you can get away with 5–6%. Thailand right now, this is annual rental, right? Thailand right now, they've just realized that since the Asian financial crisis, nobody has built new offices really. So now it's just like all old stocks, and then you have vacancy of 5% in the entire market. Then everybody's trying to rush to build. And so right now, Thailand is doing very well. It's like you're hitting 4–5% annual rental increase. Singapore is 2–3% annual rental increase.
And you talked about the currency risk and the volatility, but as these economies mature, would you expect that volatility to lessen?
I would think the movement will not be as up and down. I mean, Vietnam has really gone like a big seesaw, and you can see Thailand is less than that. But it's really versus the U.S. dollars. It's U.S. dollar is just so strong, right? So whatever they do whatever the Fed decides really affect these markets very much. But the volatility will be less. In fact, for this year, both the currencies have appreciated, the peso and the baht.
What are your expectations for the US dollar, though, going forward? I mean, there seemed to be some feeling out there that Trump might want it to be slightly weaker than it is.
I can answer real estate questions. Any bankers who can help answer the currency situation. We don't really, as a policy, we don't hedge because we pack as much return as we can on our real estate, and then we'll ride it.
I'm going to punt on that in a slightly different way, if I may. I'd rather not make forecasts on what Donald Trump will do next.
Well, very, very sensible. I was just out of. Incidentally, I was moderating a panel on gold investment yesterday, actually, and so currency comes into that in a big way. So I just had it at top of mind. Anyway, you mentioned. Do we have any questions from the audience at this stage? Any countries you'd like? Malaysia. Malaysia. Your thoughts on Malaysia?
I've been based in Singapore for the last 10 or 11 years. In my previous firm, we did invest in Malaysia successfully. I will say, however, I find that a challenging market. You know, if we just take sort of KL office as an example, that's going to be sort of a 5% yield in a very oversupplied market. The cost of financing it's not really accretive to me. I find that a very challenging market. That said, for particular asset classes, we would look at it. You know, if I could get my hands on a data center, for example, in Malaysia, okay. I've also looked at student housing in that market, and I actually quite like the dynamics. So for the more traditional asset classes, personally, I'm not a player. For something a bit more niche, perhaps.
Yeah, we have a similar view of Malaysia. It's a bit overbuilt, both on commercial assets, office and shopping. I mean retail. Yeah.
Any other countries out there that people would like to hear about?
I was wondering about Cambodia, because I know that a lot of overflow from Vietnam moved over to Cambodia and Myanmar or whatever. Can you give some thoughts on that for that market?
We are at an early stage of looking at Cambodia, to be honest with you. And our approach is not dissimilar from how we went into Vietnam. So we are in discussions with a group that knows the local market very well and knows a particular asset class very well, and is in an asset class that benefits from both domestic demand as well as international demand, including Vietnam. So that is our approach to a market like Cambodia. Partner with an expert local in an asset class where the fundamentals make sense.
That wouldn't be a casino, would it?
No.
Well, Cambodia is not in our mandate, in our funds. Some of the investors we talk to find it like a frontier market somehow. And so in a way for institutional investment, it's a bit difficult to get into.
Would the same apply for someone like Indonesia? I mean, it's probably likely to be the fastest growing economy in the region in the coming years. No one's mentioned it as an investment destination of choice.
Indonesia is on our radar. Again, with a local partner that has sort of a unique approach, or what we think is a differentiated approach to a sector that is perhaps oversupplied. We think it's interesting, Jakarta particularly, where traffic is a real issue. And so we're looking at a business that has decentralized their activities. And so rather than everyone try and get to the center, they're serving people in more of a sort of hub and spoke type model. So that we find very, very interesting.
Yeah, if you go to Jakarta, you'll have a finished building, half occupied, and then just two or three blocks away, they're building more massive one than that. So sometimes it's really difficult to understand. There's a big vacancy, but still supply is coming. So it will take a lot of time before this supply is really absorbed by the market.
And also, yeah, as I was going to say Kyle, but Roland mentioned, lacking infrastructure. The traffic in Jakarta is a nightmare, but they keep on promising to put in rail infrastructure and, sort of a metro. So I suppose the moment they do that, you'll probably be in there and copying the Bangkok.
Maybe.
Maybe. Over the course of these discussions, you've both mentioned the importance of having a local partner to help you navigate these things. How do you go about picking a good partner in some of these countries?
Well, you can't sort of short circuit the legwork, right? For us, the approach is to go and speak to as many people as we can, assess their track record, their partners, get references from people they've done business with, their banks, and it can be a lengthy, somewhat arduous process, particularly in some of these more pioneering markets. But you have to assess each group individually, and whittle it down to a short list, and then hopefully agree terms with a reputable and a partner that has a good track record of having done what they've said they're doing.
Yeah, it's for Arch Capital. We are all Asians. It's founded in Hong Kong. All of our senior guys are Asian, so we know the markets that we're operating in. And within our LP list, we have also Asian families, and that helps us to provide the sounding boards, because they have long histories. All these families have long histories, and when you talk to a family in Thailand, they would know what's happening. And so it's knowing people and checking out their track record and background. That's how we are going about with our partnership. So fortunately, in Thailand, we have the same partner for the last 13 years. It's done us very well. We do the same in China. So in China, we have repeat deals with different developers as well. So once you have established the relationship, then we just move on to more investments.
So personal connections plus an extensive DD process.
Yes.
Absolutely. Do we have any final questions from the audience about Southeast Asia? We have 2.5 minutes on the clock. If not, I'm going to ask our panelists. You have, one investment to make in Southeast Asia. What do you do? If you have to pick from all those countries, top pick.
I think I'm not going to limit that to one country, if I may. I'm going to come at that from a slightly different angle, which is, one of our sort of flagship investments, if you will, is we are very, very active in the data center space. It's highly undersupplied. Getting power these days is getting more and more difficult. In fact, Singapore has effectively put a moratorium on data center development. But as an asset class across the region, we think that is a very compelling opportunity, classic supply-demand imbalance. And there are high barriers to entry in that sector, because that really requires deep knowledge of a very niche sector. So that would be my top pick.
Which country has the cheapest power?
Indonesia is relatively cost effective. Singapore is not. But that said, it's not as simple as sort of identifying the country with the cheapest power. There are a lot of idiosyncrasies around each of these markets.
I bet. Jonathan?
We have invested, and we still like the office in the Philippines. I think that growth story has a long way to go. It's sustainable. The REIT will be formally introduced, and they will be REITs starting first quarter of this year. That will institutionalize the way that part of the market is being viewed. So you would expect more institutional money to go into that segment.
Are you running those REITs? Is that?
We're not.
Who's running those REITs? Who's going?
The guys who will be launching it would be mostly developers for now, because they really have the larger stocks. So those guys are the first ones who would do it.
Okay. So if you're interested in investing in either data centers or Philippine office space, please come and pick the brains of Jonathan and Roland after the panel. But can I have a big round of applause for our panelists on Southeast Asia? Okay, we